Eric Muadit, Muadit.com, with a continuation of our series here that we've been discussing, which is the symmetry on the indicators. And here we're spending a lot of time looking at the MACDs and the RSI. So let's take a look at the current market situation. This is pretty much about the next day after the previous video, and we're just following along to see what the market is doing. We are still showing the possibility that the Nasdaq could eventually show support on this line here. If it does, then the market is due for a bounce. So that is what's going on. The critical aspect here is that we have drawn this line going back to 5 years. So just a little bit of a quick look, and we see that that line still continues to be in play. Remember, this is a weekly chart, so it might take weeks to play out, but there is the look. So we are starting to wonder whether this is going to be good enough to stem the recent slide in the market, and also the fact that there's another line connecting the lows. If both lines hold, we've been speculating that there's a very good chance this market might have some type of a short-term bounce. Now let's take a look at the daily for the Nasdaq, because right now we are trading with the markets early on in the morning. Nasdaq is down a little bit, Dow is down, S&P 500 is down. But what I want to take a look at here is that we were looking at the Nasdaq here trading back above 30.90. But at some point during the day, earlier in the session, it was down below 30.9. So if it can hold above 30.9, you know there's a chance for a continued move after this lows here. If it starts moving back below 30.9 and stays below that for a day, couple days or so, the issue here is that the more it stays below 30.9, the more the bounce on the weekly will not take place. But right now we are looking at a healthy bounce above 30.90. Let's take a look also at another aspect, which is the hourly, and we are going to take a look at this from two angles. One angle is taking a look at this from the 26 RSI period, because this is the one I tend to use a lot. Now if you find yourself using, let's say, 21, and the reason why I say you can still use 21 as opposed to 26, because 21 I think to me is the more legitimate number, because it's part of the Fibonacci series. It's 2, 3, 5, 8, 13, 21, 34, 55, 89, and on and on. So 21 I think is more legit if you're setting the small time frame. Now keep in mind that the default RSI setting is always set at 14, but I want to take a look at this either way. So we're going to take a look at this based on my default chart setting on the hourly, which is 26. Couple of observations here is we're coming back to test this line, which was the previous break if you draw it that way. And so depending on whether the market can move above the blue line or not might suggest where the next direction swing trade might take place. So that's the hourly view. And keep in mind we had talked about the previous break level. We had drawn it somewhere around there. There's a break line here that the market eventually is going to have to contend with, somewhere around there, which was the previous break before this drop. Okay, so at some point the market is going to have to come to test that level, whether it can hold. If it holds and moves above that, that's bullish. If it finds resistance, then that's going to be suggesting that the market pulls back. But what I want to show you here is I want to spend some time on the 14-day period, which is what most of the charts are set to, because on the 14-day you will see that there's an interesting look. So we take this line, and here just want to impress on you that it is good practice to always keep your lines on the chart and extend them down the road, because they help you in figuring out what's going on. So if we take the same break line, remember this break line here brought the market lower, and so if we extend that same blue line that began this recent slide, you can see here that we are dealing with a market that is showing double top resistance short term on the Nasdaq, suggesting that hour to hour there's a lot of work this market needs to do to correct some of its issues. Now I bring this point up because if you are thinking of trimming some of your short positions, this is some of the things you might have to consider before you actually pull the trigger on reducing that short exposure. Now take a look at the 30-minute chart, and again here I'm using your traditional 14-period RSI setting because I want to show you all these things play out almost the same. There was a recent break on the trend here, so once we connect the lows here in late December, we broke through here. That break corresponds with this move, in fact even before the drop of January. So this late December drop happened here, and so what we can do is take that line and draw a straight line. So let's find that break point there, and we'll draw that line. So it's going to be slightly above the 50 level. Let's see whether I can. Alright, so draw it like that, and you can see that again we are seeing another situation where the market is showing short-term resistance. So if you are thinking of getting out of your short position, the 30-minute chart and the hourly chart seems to be indicating that we should not be in a hurry to get out of our short positions, because the market still has to prove itself that it can move above the breakpoints that it broke through recently, and it is failing. Now let's take a look at the Dow. Let's go to the Dow. Now this video here still talks about symmetry, and while we're talking about symmetry, we are also trying to look at current market situation to determine what direction to take. But take a look at this chart here for the Dow, which gives you pause if you are going to close any short position. If you take this line, and remember, we want to be in the practice of extending our trend lines. There was a break there. That break was consistent with the break there. Market hasn't been back to that level, so we take our blue line and extend it. And again, we are seeing that after the last couple of videos on this series, we were suspecting that this could be an area where the market could stall. So let's say you wanted to get out of your short positions. This tells you to be patient with your short positions, because the more this is confirmed as resistance, assuming it is confirmed as resistance, the more it suggests that RSI pulls back and prices pull back, and probably if it pulls back, might be good enough to take out recent lows, which means you need to stay and continue staying the course with your short positions. Now, if you are looking for a reason to get out of any short position in the short term, or at least trim those positions, then that blue line would have to be broken. The market would have to break out above that blue line, something it hasn't done. So there's a reason here we are seeing why we shouldn't really be in a hurry to get out of those short positions, because the market is still struggling. We take a look here at the Dow Transportation Index, and I bring this up because Dow Transportation Index is trading at 31.65 right now on its weekly RSI, excuse me. So we got the weekly RSI. And one thing I want to say here is, whenever you're looking at charts, it's pretty much a dance between all these factors. And so you can't take one chart and necessarily base all your argument on one chart. Yes, one chart might be the one that gives you reason to look for further confirmation, but all these things have to play out. So it's a dance between all these different time frames, and eventually you come up to some type of a conclusion as to which way you think the market is positioning itself to trade in the short term. So on the weekly chart for the Dow Transports, we're looking at the Dow Transports trading close to that number of 30.90. So we have to be aware at 31.65 right now, if it cracks below 30.9, whenever it cracks below that, that's going to suggest a big down week. So that's also another reason why we shouldn't be in a hurry to get out of those short positions. We take a look at the hourly for the Dow Transports, and what we see here on the hourly is coming back just like we saw the break point coming into the beginning of the year. That break there on the hourly has been tested a couple of times since then, and you can see that it's been resistance on both occasions, telling us we are still looking at a market that is not healthy, especially as far as this Dow Transportation Index is concerned. So resistance there suggests that until such a time that the market can clear back above that red line, we have to assume that this is a market that is still in trouble. So until we clear that red line, this is a market that should be probing lower prices. Now keep in mind also, if you take a look at the MACDs on the hourly, we are looking here at resistance at the 0 line on the secondary MACD setting. So this in fact, if you take a look at the last 3 instances, so let me show that. You can see if you take a look at the secondary MACD, you'll notice uniform activity rejection here above 0 and back below it. So there is your uniform MACD action that gave you this short-term high coming into late December. So this high there came with uniform resistance on the MACD. There was another uniform resistance and rejection at 0, which gave you that high. And now we are looking at another rejection and uniform activity above 0 and back below it for this recent high. So lots of things are still pointing to markets that are still in trouble. So one cannot necessarily start playing the market on the long side. And even if you did, you have to be aware that we haven't seen a strong buy signal. Yes, on the S&P 500, which is the chart in front of you, there's an argument that the more it shows support on its weekly RSI line, the more it can hold that level there. Remember this entry here on the RSI, this movement on the RSI short term was good enough from that movement to move the market from here to here. And so now if it can come back and test that successfully, it might move higher. Now keep in mind that this might actually make a lot of sense, because you can see at the support line here, this market held, and we've generally supported those lows. So we haven't broken through these lows here. So if it was good enough to support the market during these lows, and now it is trying to hold at a higher level, this might be suggesting that this is something we have to watch for the rest of the week and in the next couple of weeks, because if it holds, irrespective of all the other charts, that might be good enough to stem the slide. We take a look at the hourly for the SPX, again looking for symmetry, which is the subject of this video. We come back to the recent break coming into the new year, end of 2015, early 2016. We draw a line from there just so we can figure out where the market could show short-term resistance. We can see that at the highs of this morning's open, we are coming back to test the same line. So short-term, there is no reason here to necessarily get out of any short position, but actually to look for the market to continue struggling. We take a look at next at the 30-minute chart just for color. And what we see here for color is, just like the other markets, we can come here and take a look at the break line, and if we come here and draw this line here, we can see it broke down. It's a simple break, just like the other charts we've been looking. That break was pretty much of a destructive nature. We extend that line, and you can see resistance on the back test failure there, short-term highs. Resistance right now looks like it is going above that blue line and wants to go back below it, which is giving us short-term high there. So lots of reasons here on that, based on that analysis. The other analysis is based on the previous break line, depending on how you want to draw it. There's a break here, there, and so we can draw a line from there, which is something like that. And so it's still playing out. Keep in mind that right now it is above that blue line. Okay, you can see it's above the red line, and so if it stays above the red line, one can say it's moving out above the red line. But it is still playing out. The way it's shaping up is, it looks like, in my opinion, that it, to be consistent with the other charts we've seen, it might eventually go down and up and back below the red line with uniform action. So it's also playing out that way. Let me show you another view, which is a recent, also this break point. Late December of 2015, off the highs there before this drop. And so we know that there's another line just above 50, which is somewhere around there. So it could be that it is already showing resistance on the break line, which took place in late December. So lots of resistance levels there. Hope that is not very confusing. So we come back to the charts of the stocks that you are currently owning, which is short the market, EUM. We remember right now we are still talking about the possibility that this could be a level where it stalls because of the previous break level, and that continues to be in play. So that is a troubling weekly chart. Anything that shows this type of resistance, you might reduce that position, but for now we haven't seen the confirmation on the smaller time frames. And also you can take a look here at the hourly for this instrument, and you can see that it really isn't broken. It is still holding a nice trend line, pretty much holding a nice trend line. It hasn't broken down. Yes, it could pull back, but we haven't seen the break. And you can also see that short term, there was a break here, breakout in the beginning part of 2016. So this gap up here, and now we can draw a line from there to see where it finds support short term. right there, and you can see that the market is doing itself to show uniform activity, and if it can hold there, then this chart suggests that it is still within a good behavior in terms of its upward trend. It is still holding up very well with its upward trend. So yes, the weekly chart is showing the risk of failing, but we haven't seen confirmation on the smaller time frames, which means we just be patient and let these things play out. Also here on the EEV, same type analysis, so let me not spend a lot of time here, but same type analysis. If you take a look at the hourly, you can see just like the other chart, we figure out where the breakout took place for this move to take place. This nice move took place with this breakout here, and so we know we can draw a line from there that should give us nice re-entry, which is here. So this right now is arguing for an addition. If you wanted to add to the position, there is where you would do it and see what happens. Otherwise, if it comes eventually and breaks through that, any break through that green line, then short term we are seeing the confirmation that night's about to drop. And keep in mind, all this is because the monthly chart has really been solid. The monthly chart is perfect. It is moving above 61.8 for the first time in 3 years. That's a seriously looking powerful situation. So we always want to be looking for stocks that are moving above 61.8 for the first time in many weeks, or in fact for the first time in more than 3 years, excuse me. It is best if it is moving above 61.8 for the first time ever, then that's even more powerful. In fact, let me take a look at the all-time data here, and here we are seeing a stock that is, or an ETF that is moving to all-time highs on its monthly RSI and also pressing above 69.68, 61. Whoops, all these numbers can get confusing. 61.8 for the first time ever. So it looks powerful, and you can see that at least one of the main the main MACD is at all-time highs and also pushing above zero for the first time ever. So really, we need to continue giving this instrument the benefit of the doubt, just because it is superior monthly chart breakout. So yes, the weekly chart was becoming a little bit of a problem, but we haven't seen confirmation that it is breaking down on the smaller time frame. So based on uniformity analysis, we can still see reason to continue holding on to those short positions with an eye on this weekly chart, because even this weekly chart is giving us the idea that week to week, if we see this being confirmed as resistance with uniform activity, we have to assume that it could be meaningful. But for now, there is no confirmation of or any reason to sell this. I'll continue this series as we continue looking at our ongoing series here on how to use symmetry whenever you see symmetry on the indicators. Eric Mwathe, Mwathe.com. As always, good luck, peace, and blessings. EACS.